So moving on, our next panel discussion is Mobilizing Global Capital, Empowering Hong Kong's Innovation Economy for a Win-Win Future. And now I would like to invite our panel chair, Ms. Elizabeth Chan, Head Hong Kong, Chartered Accountants Australia and New Zealand. And also our panelists including Mr. Arnold Lau, Associate Director General of Investment Promotion Invest Hong Kong, Mr. Matthias Knobloch, Managing Partner and CEO at Betatron Venture Group. And last but not least, Dr. Gordon Yan, Founding Managing Partner, Radiant Tech Ventures Limited. Let's give them a warm applause and welcome our speakers on stage. And now without any further ado, I'm going to pass over the stage to Elizabeth. Over to you.
Thank you, everyone, and welcome to this panel. I'm Elizabeth Chan, the head of Hong Kong of Chartered Accountants Australia, New Zealand, CAANZ. Thank you very much for Cyberport for inviting us. Well, I'm actually not a subject matter expert in this topic, but we have an excellent lineup of panel speakers here today. We have Arnold from Invest Hong Kong. We have Matthias from the Betatron Venture Group, and Dr. Gordon from the Radiant Tech Ventures Limited. Welcome. So setting the scene for the panel discussions, the panel examines how venture capital is shaping Hong Kong's innovative ecosystems, supported by the strong government initiatives and growing global investors' participation. As general partners from mainland China, Southeast Asia, and beyond source and execute deals through Hong Kong, as Chinese tech scaled-up expands globally or pursue listing in the city, we're going to explore how policy initiatives and cross-border capital flows are shaping a more dynamic and competitive environment for entrepreneurs and investors alike. Now, let me start the questions to Arnold. Hong Kong is positioning itself as a magnet for global capital, with initiatives like Capital Investment Action Scheme, CIES, opening a new doors for high net worth growth individuals to participate in the innovation economy. How is the new CIES reshaping Hong Kong's capital landscape? Like, what types of investors and sectors are showing the most interest, and how is Invest Hong Kong supporting the momentum? Arnold,
okay, thank you, Elizabeth. So as we all know, Hong Kong has always been a very, gaining the position as a strong magnet for capitals. Right now, we know Hong Kong is the Asia's #1 and world's #2 in terms of the cross-border wealth management. Asset under management is 4.5 trillion US dollar. So the new capital entrance scheme, which is called NCIES, is relaunched in March last year, which builds on the strength of such a position, and then allowing the ultra high net worth individuals to participate in the Hong Kong innovation ecosystem by putting in their capital at least of 30 million Hong Kong dollars within a defined period of time. On a qualified type of category of assets, right? So since the relaunch up to now, today, there's already 2,400 applicants in total. And then if all approved, they are going to bring in about 72 billion Hong Kong dollars of new capital into Hong Kong, right? So according to our data right now, about 60% of these new capitals, they are putting into the regulated funds and equities, which obviously including in the high-tech companies, right? This is how they participate. And aside from that, all these capital, they also will be allowing them to also participate into, joining as a limited partner into the private equity fund. And also there is a 3 million out of these 30 million, they have to put into the Hong Kong investment company. And then through working with partners like Betatron, Radiant Tech Ventures, they all putting into the innovation ecosystem and in investing and putting all these energies into the market, right? And the role we play as Invest Hong Kong are two. Basically, one, we have a team who are really reviewing the applications of NCIES making sure they are putting the money in and investing, which is compliant to our regulations. And number two, we have another team, which is our family office, dedicated team, who are promoting this scheme around the world. So continue to promote around the world to bring in the new capitals into Hong Kong to reinforce this kind of virtuous cycle of new capital putting into the innovation ecosystem in Hong Kong.
Well, thank you, Arnold. Well, we strongly agree that CIS is one of the recent key initiatives by the government and reshaping the VC landscape in Hong Kong. Well, now, moving on a bit to look at the startup growth. This question to Matthias. From a venture fund perspective, so how do you assess the readiness for non-local individual capital investors to enter the early stage Hong Kong startups? Like how to attract the international startups to start their footprints in Hong Kong versus the other nearby cities or countries like Singapore?
Okay, sure. Thank you, Elizabeth. Well, I think there's two questions, right? One is the early stage and the readiness of capital. The second one is how do we attract international startups to come to Hong Kong? Starting with the early stage. So we as a firm have always been very, very focused on the early stage. In fact, when we founded Betatron Venture Group almost 10 years ago, we started it on the premise that there's a lack of support and capital for early stage startups, particularly in Hong Kong. And then we started basically to fundraise to basically address that lack of capital. And it's been really, really hard, right? We spent the first 3 years raise capital, raise a couple of micro funds, and in total the size was about 10 million US, right? So very modest amounts of capital. But we used that capital to build a track record, to show that there's an opportunity there, to show that we can deliver and that we can ultimately exit companies. And based on that experience, based on that track record, we've then been able to build larger funds and then also more recently manage funds on behalf of the CIS. So it's been a journey, and I think in terms of readiness of capital, I think there's still a lot of work to be done internationally, but also locally in terms of educating on the opportunity in the early stage space. Now, the second part of the question is around how do we attract international startups to come to Hong Kong? And that's very much in line with our thesis and our footprint. So in the last 6 months, last year we've done some 7 investments, 2 from Hong Kong, 2 from Singapore, or 2 or 3 from Singapore, 1 from Thailand and 1 from New Zealand. And obviously the ones in Hong Kong have a very strong presence here, large teams are growing in Hong Kong and beyond the borders. But for the international startups, there's a particular value add that we see as a Hong Kong investor, and that's basically opening up the Hong Kong market to them. And I think the general misconception, more so on the investor side than on the startup side, is, well, Hong Kong is a relatively small market. You just have 7.5 million people. Why should we bother? Why should we care about putting teams on the ground, hiring resources in Hong Kong, and ultimately growing here? Now, we as an investor, we only focus on B2B opportunities, right? So we don't necessarily care about the size of the population or the local consumer market. But what we do care about is helping companies basically scale with corporate customers. And what you have in Hong Kong is almost 10,000 multinational corporates that have basically either regional head offices or head offices here, and that you can basically approach to sell them product, sell them your services, and that have meaningful wallet size, so it's actually worthwhile your effort. So if you look at Asia, excluding mainland China, and you're looking to grow your business there, the thing that in our mind doesn't work is if you go into every single one of the smaller markets in ASEAN, be it Indonesia, Philippines, Malaysia, Thailand, you name them, and basically build local teams there, go into the local corporates, for various reasons, different ecosystems, different regulations, different tech teams. But the most important reason is, even if you're successful, the wallet size that you're going to earn out of any of these local contracts is very, very small. Now, in contrast to that, if you go into a head office in Hong Kong, and to a certain extent in Singapore, and you speak with C-level people, if you sell software, you go into the CTO and you sell him product, not just for Hong Kong, but for all of Asia. Then all of a sudden you speak with the relevant people and you can help them build infrastructure across a region, and you have wallet size to basically get paid for your services. So long answer short, on our side, very largely about the MNC opportunity. Then obviously, and I think I've talked a lot, so I'll keep it short, but obviously there's amazing talent in Hong Kong. We've talked a lot about the universities, talent coming out of universities, and more recently, the stock exchange and exit opportunities that we have for tech companies. It's a whole different chapter, but maybe I'll pause here, Elizabeth, and hand it back to you.
Very good. I mean, thank you, Matthias. A very good overview about the startup growth and the process. We will also talk about the startup ecosystems that Matthias just bring up to you. And I have a question to you, Gordon. So what did you view for the changes of the startup landscape and the ecosystem scene in Hong Kong in the recent years?
And so obviously, as we've talked about earlier, the government has put a lot of effort into developing Hong Kong into a venture capital hub for technology and innovation. I think innovation technology has a very long history in Hong Kong. Obviously, it evolved throughout the years, starting from the dot-com days, and now we're in the era we are in today. But if you look around, places like China, for example, just across the border, has developed much quicker than Hong Kong, right? Even though we started earlier. And part of the reason is the size of the market. But more importantly, I think Hong Kong being an international financial center definitely has enough capacity to be a much bigger player in this particular market, right? But what I think is still lacking is that, throughout the years, we spent time developing every stage of the ecosystem, starting from seed and angel stage, then early on investments, growth stage, and obviously the late stage market has always been very vibrant in Hong Kong. And the introduction of Chapter 18A, 18C in the stock exchange definitely helps to boost that as well. But the total volume of this ecosystem is still relatively small. And I think it grounds, it goes back to the fact that it is a very high failure rate industry, right? Going into startups, any tech innovation in startups are likely to encounter very high failure rate, right? So for that reason, we need a very large volume of early stage startups, right? Continuous supply of early stage startups, and then we gradually weed out the weaker ones, and hopefully then have a handful that we could, be proud of. And this is, I think, the large volume of early stage companies are still lacking. It's still lacking. The numbers are still lacking. Government efforts is going into, encouraging more investments from universities, for example, through schemes like the Raise Plus scheme, attracting, co-investments from the private sector. Various schemes from sort of the IT Bureau, for example, in the ITVF scheme, that encourages investments into early stage startups and technology research. So all that, I think it's hoping to make it happen. But we need to, I think, step on it and make it even quicker. Another thing is on the other side of the government, there's a lot of good policies coming out to attract more GPs to be based in Hong Kong, whether to start or to be relocated to Hong Kong. Obviously, we see recently a lot of mainland GPs taking interest in Hong Kong, which is a very good thing. Also, we see some GPs from Southeast Asia as well taking interest in Hong Kong. So we think we're on the right track, right? We just need more momentum, the snowball to keep rolling, and the scale to keep growing.
Yes, Gordon. I think it's good that the panel compositions we have Arnold from Invest Hong Kong. We have two VC experts here. And actually, my follow-up questions, if allow me to ask a bit more about these startup ecosystems, probably either Gordon or Matthias can comment on. And it's about, you mentioned about the government has a lot of great initiatives already, but then what enhancements, initiatives, or measures of startup ecosystems would you suggest helping to further mobilize individual capital of innovation in Hong Kong?
Shall I go first?
Yes.
Yeah. Look, I echo what Gordon said earlier. We're on the right track, right? And we're super encouraged by what we basically see is happening top down in Hong Kong. in terms of boosting this ecosystem, developing it further, with all of its aspects, the support schemes that we talked about. I think the stock exchange has been a very warm welcome, right? The performance that we've seen this year. I think if you're a startup in Asia, you don't need to look any further than the Hong Kong Stock Exchange in terms of exit opportunities. So I think we're all pushing in the right direction. I think it feels, to us as a venture capital firm from the outside, it feels very joined up, which is important, right? That we're all pushing in the same direction. So I think we'll just need to continue on that road. What we also focus on as a firm, and I think where maybe we could have more support, is also once we are invested in a company, once we're helping them to scale, to basically be able to open doors outside of Hong Kong, to make warm introductions for business development. And I know there's a lot of good initiatives happening with a lot of delegations traveling to other countries, to the Middle East. There's very strong relationships there as well. So I think that's going to be one of the areas that we expect to see more, and we're very confident that we'll see it.
That's great. Thank you.
Yep.
Gordon, would you like to?
So obviously, I touched on how the ecosystem has developed and going on the right track, but nevertheless, the scale is still lacking, right? In terms of if you compare it to sort of the scale of the whole financial market in Hong Kong. So I think what's really missing is, first of all, if you look at the Western world, whether it's Europe, US, or other places that are more advanced than we are in terms of the startup and VC ecosystem, we're missing, patient capital, right? Because obviously we don't have the big endowment funds like they do in the US. Retirement fund, there's only one, right? MPF. And currently, the MPF does not invest into VCs or startups. I think we are hopefully moving towards a direction in terms of the MPF going towards a more sophisticated or more modernized asset allocation. If you look at, again, yes, we understand that these are hard-earned monies of the Hong Kong people, and they need to keep it safe and all that, but that's exactly why we need to diversify. That's exactly why we need alternative investments, even as a small portion of the portfolio, to give you diversified returns and also to hedge against different market conditions, right? So hopefully we're moving towards that. With the introduction of listed alternative funds by the exchange, I think I'm also part of the Hong Kong VCA, and we put a lot of effort into lobbying this initiative, and finally this year was launched, and I was told there's one that fund that will be starting to list, albeit we're starting from safer, relatively safer alternative assets, but hopefully in 2-3 years time, I would like to see private equity and venture capital being part of that as well, and being introduced also into the MPF portfolio. I think secondly, hopefully there could be more initiative in encouraging private sector participation. Perhaps tax incentive for corporates if they were to invest, like the UK, if they were to invest into innovations, or even qualified VC funds. And if you also look at the case of China and the Western world, a big part of the investment also comes from entrepreneurs, like successful entrepreneurs who've exited or cashed out of some of their companies. They reinvest a lot into the ecosystem. This is still sort of lacking, or still very nascent in Hong Kong. So again, this takes time, and hopefully I think we'll with everything that we're doing, within 5 years, hopefully we'll see more exits coming out of Hong Kong and more recycling of capital.
Yeah, I mean, thank you both. Perhaps Arnold can add to the views from what Matthias and Gordon just covered, because from the government's perspective, perhaps maybe you can also give us some kind of ideas about is there any measures or things that in terms of the regulatory perspectives that of that particular schemes, the CIES, the new CIES, is there anything that you want to share with us a bit more, like from the regulatory side?
Yeah, I think in addition to bring more new capitals into Hong Kong to benefit the innovation and technology ecosystem, I think one goal is very important for us as Hong Kong government is to protect the enterprise and the public's interests, right? Making sure those monies is invested in a way that is compliant to the requirements, right? So there are a number of measures that the government will do in this regard. Number one, in particular, when it relates to the NCIES scheme, right? The 30 million for each applicant to committed to invest, right? Number one is that each applicant, they are required to engage a certified public accountant to independently agree on their net assets, investment compliance, and ongoing portfolio maintenance. This is number one. And number two, for all their investment, they will need to be held with licensed financial institutions. That perform all anti-money laundering and counter-terrorist financing checks. And also, while the investment, their portfolios value dips, they cannot take their investment away. But at the same time, they don't also need to. They are not required to put in additional money into that. So that ensures the stability of their commitment and the capital within the Hong Kong market, right? And thirdly, as I just mentioned, 3 million out of their 30 million is actually invested through Hong Kong Investment Corporation with the partners. And they are required to invest on the sectors that's really important, strategically important to Hong Kong in the 4 defined areas like AI, fintech, life and health sciences, advanced manufacturing, and new energy area. And also they are required to focus on that these enterprises has a strong nexus to Hong Kong. So all these will protect the Hong Kong public's interests when it comes to all these capital investing into the market. So we are not just bringing new money, but we are bringing quality investment that reinforce all these virtuous cycle.
Yeah. Thank you, Arnold. I think to just echo a little bit, I think that's the time when Chartered Accountants ANZ, we worked with Invest Hong Kong when the new CIS was launched, that we also pitch our CAs and the other members about actually all the funds has to be audited annually. Right? So, well, actually our topic is empowering the Hong Kong's innovation economy for win-win future. I'm going to wrap up for questions to all panelists. What do you visualize, for the win-win future looks like? It's like, specifically, how can we align the interest of the global investors with the long-term growth of the Hong Kong innovation economy? So probably I would like to have each one of you to have a wrap up
yeah, sure.
on that topic.
Look, in my mind, it's quite simple. We're going to create win-wins by building good companies, right? That's ultimately what it's all about. And then obviously down the road, we want to be able to show that we can exit those companies, show distributions to international investors, build confidence around the ecosystem, and maybe recycle some of those funds from the exits actually in the ecosystem itself, which is something, for example, that you see quite actively in the States, right? They have a very well-developed early-stage investment ecosystem, also because they have had assets, right? So, but the genesis of all of it is we need to be able to build good tech companies. I talked earlier a lot about the MNCs and why we see them as a stepping stone to basically get to scale out of Hong Kong. I think the one thing which I just want to share as we are, I think, coming to the end of the panel is one story on the hiring side where we've actually been a beneficiary as an employee from being based in Hong Kong. So earlier this year, we basically had 2 job openings out, entry-level analyst associate at our VC fund. And obviously, there's a lot of people out there that want to join a venture capital fund, right? It's a good and an interesting career. And we got hundreds and hundreds of applicants. And when it came down to the last 20 or 30 people, we basically asked them the question, we have multiple offices in Asia, do you want to join us in Hong Kong or in another office, which I'm not going to name now, right? And literally across the board, the answer was, I want to be based in Hong Kong. And I think if we have basically the best international talent wanting to be based in Hong Kong, then I'm very, very optimistic about the future for Hong Kong.
about?
Yeah, talking about win-win, I think we, from my perspective, it will be win-win when we can, as a community, can deliver return to investors, not just locally, but attract also foreign investors to participate in, again, growing the size of the ecosystem, have a few successful local entrepreneurs, but more importantly, I think because of all the efforts that the government is putting into this ecosystem through the IT Bureau, through Hong Kong IC, and Invest Hong Kong, all that investment, I think, will also return, deliver return to the Hong Kong people, because that belongs to all of us, right? So I think that's win-win-win for VCs, startups, and Hong Kong as a whole.
Yeah.
Final word, Arnold?
So basically, win-win, think about who are the key stakeholders, right? So basically the investors, right? The general public, and also the enterprise who are receiving all these capitals, right? So I think for investors, I think the win will be like Hong Kong government providing a lot of good policies, bringing new capitals that also identify good opportunities so that they can invest and generate a desired and attractive returns, right? And then for the enterprises, I think through the investment, they are able to get the new blood, all these energies for them to propel their future growth, which I think this is what the Hong Kong government has been doing. And thirdly is the general public. I think we hope through all these processes, we are able to create a lot of, as what Matthias talked about, right? Generate a lot of good job opportunities for them and bring positive economic impact to the economy, right? So it's like a reinforcing ecosystem that generate all the benefits for all these key stakeholders. Yeah.
And I believe everyone actually in this room, we are belonging to part of the startup ecosystems, regardless of the regulator, regardless of the industry practitioners or like every stakeholders. And we also striving to go for the innovation economy for that win-win future. So let me once again, I think, thank you everyone. Thank you all three of our panelists for their interactive discussions and their expert opinion. And thank you once again for hearing, and thank you, Cyberport.